today with Jeff Thomson, the President and CEO of the Institute of Management Accountants. Jeff recently authored an article for Business Finance on the new demand for leadership in finance. And Jeff, one of the things you touch on in that article is how challenging economic times really brings forth a need for leadership in finance. What exactly were you talking about?
Well, thank you, Jack. Thanks for having me. In these challenging economic times, now more than ever, the finance team is being asked to step up to even greater heights of transparency, protecting investors, trying to get out of the economic doldrums, and also to help guide the organization forward so that when we do get out of this recession, that organization is ahead of the curve. So there are so many leadership activities, cross-functional leadership activities for the entire CFO team, and that's really where the team pulls together and the entire talent pool comes together, whether it's in risk management or plain vanilla cash flow management, transparent reporting to investors and stakeholders. This is really the opportunity for this finance team, the CFO team, to leverage its talent and its business processes to get the organization ahead of the recession, of the economic recovery.
You put forth this idea of a leadership continuum in finance. What are you talking about?
A leadership continuum means that from the entry-level professional job on a finance or a controller team inside an organization up till the C-suite, the CFO or the controller, there's an entire continuum of leadership opportunities. I've always said that leadership is not an end state. It truly is a continuum. It's a mix of hard technical skills that you learn along the way, but also the softer skills of influencing and collaboration and dealing with intergenerational differences, dealing with internal and external stakeholders. So there really is an opportunity at every stage of this continuum to ramp up your leadership skills. And I've often said that at any point in time, you may not be the leader, but you may be a leader of a particular activity. You have an opportunity to improve a process, even if you're not the CFO or the controller or the unit manager.
You mentioned soft skills. In fact, in the early part of the article, you do talk about emotional intelligence and the need for emotional intelligence. And again, it comes to mind that perhaps accountants aren't always known for their EQ. Is that an understatement, or is that not fair? Or?
Well, Jack, you can see my sterling personality come out in this interview. So the days of the accountant or the finance manager being in the back office crunching transactions and coming out at 6 o'clock at night on the way home is long over. We've seen a clear migration over the years to the finance professional not only being the counter of beans, but the sprouter of beans. More and more operations are becoming cross-functional and integrated in a supply chain in any size organization, any structure, anywhere. So that has created an environment where in order for the finance team to be successful and the finance manager, the accounting manager to be successful, their ability to influence their business partners, to give them credible results, to help grow and drive sustainable performance, more and more resides on them getting out of the cubicle and taking their numbers and converting information into insights, data into decisions. And that is really the evolving role of the finance team inside an organization.
So we know, or so we've heard, that leadership is often or sometimes lacking in the finance organization. Why is that? What are some of the obstacles, perhaps, that organizations need to overcome to really begin building leadership skills?
It's a great question, and I don't want to sound too academic or theoretical here. Having come from a large company for 24 years and now running a pretty good-sized non-for-profit, these things sound a little more theoretically easy to do, but at the end of the day, the CFO team, no matter what era you look at, is always being asked to do more with less. And so if you leverage two capabilities and recognize two capabilities very broadly, I believe they're keys to sustainable success. One is talent management. So when the finance team puts together its own vision and mission for its role in the organization, I'm sure there'll be elements such as transaction processing, forecasting, budgeting. What about talent management? What are the means by which you're recruiting talent, by which you're nurturing talent, by which you're certifying talent, continuing education, a breadth and depth of skills? What is your mission and vision for that talent management aspect? The other leverage point to create sustainable influence inside the organization is a little bit more technical, but it's business process. So if you have an intense and passionate focus on business process, call it BPM, business process management, or other three-letter acronyms, that will result in a discipline that will carry you through tough times. And those business processes could be quality processes such as Six Sigma that have helped many organizations get through the onerous regulation that we all fondly call Sarbanes-Oxley. More recently, I believe CFOs are cracking the books on good cash flow management and good working capital management. But if you have that process discipline in the organization, it kind of becomes the backbone of sustainable performance, in addition to continuous talent management.
You also emphasize the importance of getting certain skills, such as M&A skills, and you sort of refer to M&A skills, you count it among some of the higher order areas of skills. Why wouldn't a young professional then want to just jump in very quickly to M&A and get those skills, if in fact it can help them build their career?
Well, that's a great question, and it goes back to the continuum notion that the opportunity to perfect these skills comes along at different points in the continuum. But whether it's merger and acquisition activity or risk management or other technical areas, there's a whole continuum of activities, whether they be technical hard skills or softer influencing negotiating skills. So absolutely, entry-level professional or a young professional, the technical aspects of doing M&A analysis and running models and scenarios, absolutely a great way to cut your teeth. But when you think about the higher order issues around M&A, I've seen statistics that have said that 70% or a large percentage of mergers and acquisitions fail. And one of the reasons they fail, and there's many reasons, is the level of market analysis and due diligence on the combined entities, how they're really going to impact the market in terms of positive customer experience, financial aspects. So there's a much higher order market analysis that needs to be done that, quite frankly, requires some maturity and some analytical development inside the organization. And then the last aspect, Jack, would be in M&A, it is very much about the human side of not getting too emotional. I mean, it's wonderful when you're a mid-sized company and just by snaring another mid-sized company, you now become a Fortune 500 that has some elegance and some attractiveness to it. You can't get too emotional. When you're at the negotiating table doing the best you can for your shareholders, it requires a level of maturity and analytical and softer understanding and influencing negotiation skills. So I believe successful M&A requires a development and maturity of hard and soft skills over a continuum of professional development.
Jeff Thomson of the IMA, thank you for joining us, and thank you for supplying us with an insightful article.
Thank you, Jack. It's my pleasure being here.